The Fed pauses rate hikes in June. What does it mean for you and where are the markets headed? The Fed finally pauses rate hikes after 10 consecutive meetings of interest rate increases. So, what is causing them to finally take a pause? You'll notice I use the word pause and not skip. That is because they have essentially said, hey, we're going to look at this and see where the data takes us to decide if we're going to continue raising interest rates. Right now, there is a 60% chance that they will do an increase in July. The most recent decision to pause was based on some of the most recent inflation data that came out. We've been talking about this for quite some time, but mortgage rates follow inflation data. Inflation is continuing to come down, but while it does still remain a little bit stickier than the Fed would like, we are seeing improvements in that area. But here's the other thing. We've also had 2 weeks of increased unemployment numbers and potentially a third coming up this Thursday, which could signal that what they are doing as far as raising rates to combat inflation is actually working. So what do we want to look for here in the future? We are seeing a little bit of volatility, as I mentioned, in the mortgage rates. We're seeing that we're in this trend. So essentially, the market could go up, it could go down from here, and it'll be interesting to see kind of how this plays out. We also mentioned the inflation data. We're watching that to come down. We mentioned the jobless claims in case more people are filing. That could potentially signal to the Fed that they need to slow things down. And also, I think we should be looking at corporate earnings right now because if the economy is softening, that will show in the earnings reports because companies will be making less money and therefore not meeting their earnings targets that they put forth to Wall Street. So again, my name is Adam Rinkin, Denver's premier mortgage lender with Caliber Home Loans. Thanks for tuning in today. Please like, subscribe, and share.